Now, let us look at the basic product, very basic. This is generic. For those who do not know, maybe for them this could be an understanding. For those who already know, this is just a refresher. So, I am talking about two very basic products. I will have auto loan. Now, I am Jack and I want to go to some financer, a bank. So, I would apply. This is a very brief process. I would apply to the bank for an auto loan. Once my application reaches the bank would do the credit assessment, look at my credit worthiness, and it will approve the loan. And when I approve the loan, the bank is lending money to me in order to buy that vehicle. I go to the dealership, make the payment, and then I purchase the vehicle. The vehicle is now owned by me. It is registered in my own name. I am the borrower, the bank is the lender, and then I will need to repay the loan over the agreed period of time. So, in this example, I am the borrower, you, the bank, are the lender. I have borrowed money from you. My vehicle, which I have purchased from purchased out of the loan which I have taken from you, is offered to you as the collateral, as the security. So, in the event I fail to make the payment, you can take the possession of the vehicle and then sell the vehicle off and get the money from that sale of vehicle. That is the way the basic function of a loan would work. So, here my requirement would be I will need to pay the principal and interest to the bank. The bank's earning here then is going to be interest on that particular loan which it has given to the borrower. This is first simple understanding of what is the basic product called auto loan or an auto finance. The second type could be a lease. I am Jack again, you are the financer. I apply for a lease. When I apply for this auto lease, then you do again the same process. You look at my credit worthiness, but at this point of time, your objective is to look at my capacity to pay the rental, whereas in the earlier case your objective would be whether I will be able to pay your EMI, the equated monthly installment, or whatever is the amount I need to pay every month. Then in this scenario, you are going to buy the vehicle in your own name, not in my name. So, I am not going to be the owner of that vehicle. I will be leasing that vehicle from you. Then you give that vehicle to me on a rental basis. Once you give that vehicle to me on a rental basis, I become the lessee, the party who is renting it. You become the lessor, the party who is renting it out to somebody else. I agree to pay you the rental over the agreed period. It could be maybe 1 year, 2 years, 3 years, whatever is the understanding between both of us. And if I do not pay the lease rentals, you can take the possession of the vehicle back from me, as it is you are the owner of the vehicle. So, taking the possession back is not going to be difficult for you. So, in this way, here rather than borrow money directly from you, I have borrowed the vehicle from you and I am entitled to, or I am required to pay the lease rental to you. So, I am the lessee, you are the lessor. The advantage you have here is that you are going to be the owner of the vehicle, and your returns here are not going to be the principal and the interest like we had in loan. Your income here is going to be the lease rent which you earn from me over a period of time. So, these are our two basic concepts of the auto loan and the auto lease.